Her Majesty Queen Maxima of the Republic of Netherlands, United Nations Secretary General Special Advocate for Inclusive Finance for Development, fellow governors, distinguished guests, ladies and gentlemen. It is my great honor to welcome Her Majesty Queen Maxima. Let me express our deep gratitude to Her Majesty for gracing this event. Her Majesty, as a major advocate of the development of financial inclusion, has had an important role in bringing the attention of the international community to this important agenda. Her Majesty has also been an inspiration to us to persevere in achieving our aspirations for greater financial inclusion. Let me take this opportunity to also welcome our distinguished speakers, guests, and all the participants from the member countries of the Alliance for Financial Inclusion, AFI, to this fifth AFI Global Policy Forum in Kuala Lumpur. Bank Negara Malaysia is indeed most honored to jointly host this global policy forum together with AFI. Ladies and gentlemen, we are gathering at a time when global economic and financial conditions remain highly challenging. While there are now some positive signs emerging, global growth prospects continue to remain uncertain. While the unprecedented and unconventional policy measures introduced by several of the major advanced economies have achieved some degree of success in improving economic conditions, their global implications have been profound, in particular to developing economies. Indeed, the repercussions from their impending exit from these measures may even be more significant. Therein lies the importance for emerging and developing economies to strengthen our economic and financial foundations, reduce our risks and vulnerabilities, and spur a balanced and inclusive growth. The events since the eruption of the global financial crisis has also altered our view of the world in a number of fundamental ways. Global reforms, in particular financial reforms in the financial system, are reshaping the regulatory landscape. The lines that defined financial intermediation activities and which connect the financial systems to other parts of the economy and other parts of the world are also being redrawn. In this environment, developing economies need to be engaged to ensure that unintended consequences on our financial systems and consequently on our economies are minimized. A key concern in this environment is thus the strengthening of the protection of segments of society, in particular small businesses and households, from being marginalized by market forces and from the disproportionate impact of instability, crises, and reforms. Related to this is the need to reinforce socially responsible finance and to ensure that the financial system really serves the economy, and to address the new and growing risks of financial inclusion, which can result in part of our community to be disenfranchised, particularly but certainly not only during periods of financial crises. In this environment, financial inclusion has gained greater prominence as a key priority for the reform and development agenda. The theme of our forum today, this year, is driving policies for optimal impact, and it underlines the need for us to have a better understanding of the interactions between the objectives and effects of financial inclusion, financial stability, integrity, and consumer protection policies. The need has become more pronounced with the recent global developments. Global prudential standards have been significantly strengthened and are increasingly applied to financial institutions in developing countries. This has heightened the practical challenges faced in implementing these standards in a socio-economic setting where promoting inclusive opportunity is an important objective. I should say, of course, this implementation of these reforms are not just unique for developing economies, but also for the developed economies as well. And the same is also true with the stronger standards to combat money laundering, to safeguard the integrity of the financial system, and in building financial systems that are resilient against crises and abuse, we cannot neglect the socio-economic impact of the policies pursued. Our efforts to build a stronger and more stable financial system would also work to strengthen the linkages between finance, development, and not to weaken it. Consumer protection regulation is also being significantly strengthened in many countries following the global financial crisis, and this has been driven in a large part by the recognition that an effective consumer protection network serves not only to protect individuals from excessive risks, it also has an important role in protecting the financial system from systemic risks. While this has positive spillovers for financial inclusion, more can and must be done to ensure that consumer protection policies are designed to adequately protect vulnerable groups and ensure that financial innovation is pursued in a responsible manner. To address these issues, we are delighted this year to have the participation of the global standard-setting bodies together with members of the AFI at this forum. We share a common interest to seek to lower the barriers to financial inclusion and to create a larger positive effect of policy measures on financial inclusion. An important starting point is for the global standards to reflect financial inclusion perspectives. The standard setters have pointed out that this support is supported by the concept of proportionality, which underpins the global standards. Of great importance is how this is going to be translated into practice. By drawing on the diverse experience of AFI members present at this forum, it is hoped that we can start to build a common understanding of proportionality in practice. This is important not only to support the financial inclusion agenda, but to achieve the outcomes of financial stability and consumer protection that are intended by the global standards. This would also promote the wider adoption of these global standards. Ladies and gentlemen, financial inclusion has now progressed from access to financial services to also being concerned with whether financial services are appropriate to individual circumstances and are being used effectively to improve individual welfare. In addition, it needs to be concerned with whether vulnerable groups face increased risk of financial exclusion. This is particularly important in a rapidly changing financial and social landscape. Sophisticated risk profiling methods employed by financial institutions can make it more difficult for deserving individuals and small businesses to qualify for financial services. Aggressive marketing practices by financial institutions and more complex products, financial products that is, can also lead to poor financial decisions. The way in which financial services is delivered to consumers is also moving towards cost-efficient channels that will reduce the need for face-to-face contact, except for high net worth customers. Inquiries and complaints are handled largely by phone or email, and usually in a fragmented manner by different parts of a financial institution. This can mean less effective advisory support for vulnerable groups of financial consumers. And while wider adoption of electronic channels has enormous potential to increase financial inclusion, also needed is to ensure that the access to relevant technology in order to avoid being disadvantaged from using alternative channels, which will become relatively more costly. A delicate balance, therefore, needs to be achieved in developing solutions that will allow that financial systems to grow, innovate, and support the economy without widening the divide within our economy. In many of our countries, non-bank financial institutions are envisaged for a greater role in increasing financial inclusion, thus to contribute to sustainable economic growth and development. For some time now, particularly after the global financial crisis, stronger regulation and balance sheet constraints of the banking sector have also led to rapid expansion of non-bank credit. For the most part, this expansion has not been well managed, resulting in growing concerns with over-indebtedness in many parts of the world. And certainly in Malaysia, we are facing this as well. One response has been to strengthen the regulation of such institutions and reduce the inconsistencies on prudential and conduct standards that apply to banks and non-banks. Another has been to capture better information on the activities of the non-banks as a basis to inform more targeted policy measures. The question then is how to evolve the role of non-banks financial institutions to continue to contribute in a sustainable way to financial inclusion. And while we can agree that a different approach of regulation needs to be applied, it cannot be at the expense of protection for financial consumers and the risk to financial stability. The middle ground is what is needed, taking into account the specific context of our economies. And finally, another important strategy for financial inclusion is the enhanced role of financial education. This is not only to encourage the greater participation of mainstream financial inclusion system, but also to keep individuals already in the mainstream from being financially excluded in the future as a result of the changing financial landscape. And in a recent report by the OECD, a lack of awareness of the different types of financial products, the low level of confidence, and poor knowledge of how products work are identified as barriers to financial inclusion. These factors will become more acute in an increasingly more complex and technology-driven financial system. Through the AFI platform, we have a unique opportunity to work together to improve lives through the financial inclusion and to have an enduring impact on global issues and developments. In this connection, a specific outcome of this forum will be the commitment of AFI members to an accord. The accord will build on the Maya Declaration of 2009 to extend the commitment of AFI members to take the financial inclusion agenda a step forward towards achieving the vision of a truly inclusive financial system. Let me conclude by expressing on behalf of Bank Negara Malaysia our deep gratitude to Her Majesty Queen Maxima for being with us today and demonstrating her strong commitment to the cause of financial inclusion. I would also like to thank the distinguished speakers and resource persons who have traveled from various parts of the world to share with us your valuable insights and experiences. To all the participants, I hope this will be a memorable event, one that will generate new knowledge and new ideas to spur your own country's journey to greater financial inclusion. Once again, selamat datang to Kuala Lumpur, and thank you for being here.